Welcome to Thrive Thursday. I'm so excited that you guys are here. We are going to be talking about an interesting topic tonight. It's not always the funnest topic, but I think it's essential for real estate agents, definitely for real estate investors, and I'll always make it fun. So we're happy that you're here. For everyone that's been consistent on this call, I'm so proud of you. Every single week we are here on Thursdays at 6:30. This call is put on by the Tech and Growth Hub. We do have a Facebook page, we have a WhatsApp group, and anyone that's a real estate professional is invited to this call. So anybody that is involved in real estate law, lending, who's an agent, anyone from any brokerage, this is an open call and it's free. And I know that we have been doing this for 7-8 weeks now. We have over 125 people registered, and we are going to have the replays on our YouTube page. We are working on doing that. So I will send a mass text out once we have that completed. So if you are watching this on the replay, we are still glad that you're here. And if you have any comments or concerns or questions, you can look at the description on our YouTube link and get in contact with us. So tonight we're going to talk about taxes. And I just want everyone to be really honest. As a real estate agent, how many of you are like really in tune to understanding tax knowledge, not only for your personal business, but as far as real estate investing is concerned, and just capital gains tax as far as assets? Put a 1 through a 10 in the chat. A 1 is not great. A 10 is I pretty much could be like the speaker on this call. 1 through 10 in the chat. How much do you know about tax? Thank you for your honesty, Carmen. A 2, a 5, a 5. Okay, cool. Even myself doing classes and doing all of these things, there are still things that I lean on a tax expert to explain to me. And I also think it's very important for us. I always tell you as agents, if you don't know the answer to a question, you can tell someone that you can get back to them, but you should be a catalyst and a connector in your industry. So you should have all of these people in your arsenal book. So where anybody that wants to buy real estate assets can come to you and they can get credit repair, they can get business funding, they can get taxes taken care of, they can have all the lending for primary residences that they need, and they can trust you to be their resource. Why? Because that opens up your lead funnel this big. Last night, we were talking about fixing people's credit, getting people business credit and all of that so they could buy investment properties. And I simply said to people, if you posted an ad that said, do you want to buy a house versus do you need to fix your credit to own a home? How many more leads do you think that you would get if you offered that resource to people? So, hey, I can set up your entire investment portfolio for you, connect you with the proper resources so you are adequately getting the tax deductions, understanding appreciation, and all these different things in real estate. If that makes sense, put a 1 in the chat. We promise we won't make this boring. So I'm going to pin my friend here. So this is my friend, Ebe. And so crazy how I actually met him is he actually has a content creation studio with a partner of his. So for all of you that went to Ellie and Vince's office on Northdale Mabry, he actually has an office directly upstairs from their old office. And of course, I'm a talker. So Ebe, I came in there and we got to talking about touring the studio, business, all these other things, blah, 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 blah. I've connected him to other people now. He's now doing my tax stuff for me and some of my investor clients. And I'm going to be doing some different shooting style stuff that I'm not going to do in my own studio in his studio. So he is with Tax Pros Financial. And if you could please put his website in the chat, but he is not only a tax specialist, he also invests in real estate. So it's kind of cool that he not only can tell you about real estate investing on his personal note, but he does it himself. So Ebe, welcome to my call.
Thank you for having me. It's been a long day for me. I actually flew in from Panama, not Dominican Republic, just so you know.
Oh, you did fly back to Panama first.
Yeah, so I went Dominican Republic, then one day here, then Panama. Now I'm back here today. Yeah,
Okay, I love that. And
absolutely.
also, you love public speaking.
It's funny, she kidnapped me and said, "You're gonna be speaking today." And I was like, "Wait a minute, I'm not remotely prepared for this." I had a flight, and I'm not much of a talker. I'm probably more of a personal type thing, but here I am, and I'm actually
You're a
happy to be
numbers
here.
guy, though.
Yeah, yeah, I am a numbers guy. Yeah, I'm a
Uh,
thinker. I'm a big thinker here. So.
And can you just kind of give them like a little bit of your background, how you got into taxes, where are you from, the 15
Sure.
languages that you
So,
speak, and your
yeah,
18 degrees that you have?
a little bit about myself. So, I've been doing taxes for a little over 18 years. Collectively, here in the business, we have over 25, 30 years experience now. I got into taxes because of my father. My father was a pastor slash accountant. I didn't want anything to do with taxes at the time. I wanted nothing to do with my dad at the time, just because I was rebellious, of course, like anybody else would be. And so, but ultimately, some things happened. Unfortunately, a tragedy. My father passed away, and I was forced to take on a very monumental task, in my opinion, because I had no knowledge of tax then. And I had to embrace this business very quickly and learn as fast as humanly possible. So, and well, 18, 17, 18 years later, here I am. I focus specifically on real estate taxation. I deal with a lot of investors and just different levels of classes depending on what their needs are and whatnot. I structure a tax plan for them. So, in regards to my languages, I'm bilingual. I speak fluently Spanish. I speak fluently in English. Of course, I'm talking right. Those are the two languages I speak. 42 years old, married, three girls. I got two identical twin girls that are 6 years old and a 10-year-old little girl, and they keep me pretty
He's in a
busy. So
house. He is definitely the minority and only male in his home.
100%. So you can imagine the level of patience that I have. I've learned over time to just deal with very complex matters in a very calm and relaxed way. So yeah.
With twin girls, yes.
Oh yeah. They keep me pretty busy. So
Um, put a one in the chat for Ebby's story. I like to partner with people who have phenomenal stories, and I like to do that for a multitude of reasons. Is when you are speaking and training and doing all these things, it's so engaging to connect with people that have a story. And I think it's awesome how and why he got into this industry. So we love to start off every Thrive Thursday call, letting our guest speaker tell you a little bit about themselves. And I seem to find the people with really great stories. So I love that. And I'm going to go ahead and share my screen for you guys tonight so we can go through our slide deck. Perfect. Perfect. Can everyone see my screen? Where did like my chat though go? How can I like pull that up? Dude, remember you have to be nice to me because I'm sharing my screen, but you guys are like not on the same screen as me. Um, well, I can't really like chat with you then. Why is that like that? Yes, we can see. Okay. Now I'm going to minimize it. Dude, what's up, my Mac users? I hate this. Like, I can see my screen now, but like the meeting is like deleted. Okay, well, we'll just rock with it. Oh, wait, now you can still see my screen now? Yeah, but then I
I
can't
see your
control.
screen, and I see you on the top, and then I can see the presentation here. I don't know if everybody sees the same thing as I do, but
Okay, cool. So let's be honest about taxes is real estate agents hate dealing with taxes. I'm not going to ask this question because I'm not going to embarrass everyone on the call, but I guarantee you that there's hardly any one of us, including myself, that has already filed 2025 and all of the last years of their taxes. What sucks about that for us is it stops a lot of things that we can do when we show income. So we are self employed. Most of us don't have W 2 income. And it stops us from doing a lot of things. One, buying assets, which is what we tell everyone else to do. So we're going to talk about a couple things on the call tonight that I think will help you gain leads in your business and also explain things to you with our tax expert here that can help you serve your clients better as well. So I think that it's really awesome to partner with a tax strategist. Ebe can put his phone number in the chat as well. If you want to link up with him, great. If he's not the guy for you, go find someone else, no problem. But I do think that for you personally, minimizing your taxes legally, controlling like your income, working with anyone yourself, your lender and your tax guys should be on the same page. Like I don't ever buy any real estate assets without consulting my tax people and the people lending me money. I mean, you have two choices. And Ebe, correct me if I'm wrong. Either you're going to pay the money to the government, or you better figure out a way to leverage your cash. True or false?
That is correct. 100%.
And I think that two things that people don't do is they don't understand donations and how to leverage all of that. Which also can create partnerships for you and generate business for you. And then the second thing is they don't understand how to leverage real estate assets. So at the end of the day, real estate agents can use people like Ebe to do all of these different things. One, you can do real estate events. If you were at the 4 Weeks to Success class last night, how I leverage people like Robin Reza that fix credit, build business credit, do business loans, all of those different things. They are working with people that want to buy real estate. So is Ebe. So is any other tax guy. You also can use them as a strategist at investor events, how to buy more property without raising your taxes, how to show the right income to qualify, how investors use depreciation, and you can leverage them with regular retail buyers. If you have somebody that is self-employed or that is wanting to get into real estate investing, set them up. Be the entire tool for every single thing they need. What is the most common thing, Ebe, that you think that real estate agents that puts them kind of at a loss when they're not partnering with a good tax strategist for them and for their clients?
Well, so I come across this all the time because I service about on average between 1,500 and 2,000 clients, not on my own, of course, with my team here. But one of the main things I notice is that the realtors always, you guys, it's a sales business, right? Everybody wants to sell, sell, sell. But a lot of the times that I see with clients is that they don't qualify due to low taxes. A lot of them, if they're self-employed, are completely just reporting as many expenses as humanly possible, completely shattering the expectation of qualifying for a property. Right. So I think with a realtor is you got to work hand in hand, not just with your tax person, but also the client and having an understanding of, hey, what are you trying to accomplish? Where are we going with this? How can I minimize my tax yet qualify for the home that I want? And to me, having that conversation with a realtor, I think helps not only you close more deals, but also makes you look a little smarter, right? When you're talking with a little bit of meat on the bone. And a lot of realtors just make that mistake. They don't really partner with a tax strategist that can really help them help their client and put some money into their pocket. I just feel that also, when it comes to coordinating with the lenders, right? So the lenders, let's say, and I come across this all the time, right? You were mentioning, Betsy, the whole credit situation. A lot of people might have the tax, but I don't have the credit. I'm the kind of person when I sit down, I'm looking and I'm talking to a realtor or a client, is where are we with the credit? I do ask those questions, by the way, Betsy, because it's in my best interest to do right by my clients, right? So I try to be as informed as humanly possible with the entire transaction here. Um, I want to know where their credit is. I want to know what their income looks like. I want to know if there's anything we can take advantage. For example, a lot of people don't realize you can create what's called a paper loss, right? And a paper loss is simply you can depreciate an asset and do what's called an add back on a depreciation when it comes to underwriting with the lender. So you're essentially lowering their taxable income, right? Or what they're going to be paying Uncle Sam,
And
but
wait,
they're
this is
adding
why
that
you
back
need an
on.
expert, because I guarantee you, put a one in the chat if everything he just said about depreciation and add backs was word vomit to you. And this is why you get someone like him. The minute an investor says, yeah, dude, I'm trying to do da 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 da, I'm like, okay, great. Let me connect you with Ebe really quick because he can break that down. To them, Ebe, what you just said was probably like, what? You know what I mean?
And I get that, and I know it is word vomit to a lot of you guys, and a lot of the stuff you guys do is word vomit to me. I just look at numbers. I look at what I analyze the entire.
We
To
need
me,
you
a
in our
tax
life.
return. Yeah, technically, yeah. I'm kind of like a surgeon when it comes to this kind of stuff. So I have to look at where are we doing okay? Where are we possibly encountering some issues? How can we fix this before we get to that other stage? Because a lot of deals fall through on the underwriting. I mean, hell, I think
And this
most
is
deals fall
why
through
I
in
put this
underwriting.
on here, the secret sauce, intentional income engineering. You have to really understand in someone's life when they should be claiming more income and when they can afford to take more expenses. So I bought a house a year and a half ago. So like in 2025, I don't need to show as much income on paper. You also have to understand patterns. That's why there's tax planners and strategists. Because if I say to Ebe, hey, I'm planning on buying next year or in 2 years, I look at things on a 5 year plan on my rolling portfolios. Because as being self employed, people also fail to understand you can't go up and down like this every year because it also affects your buying power. If I show that I made 400,000 and the next year I show 150 and the next year I show this, now I don't have 2 years of stability or 2 years of a slight increase. But I gave you guys some examples. I'll make sure that Belize sends out this slide deck to you too. For instance, an investor earns $200,000 cash. The strategist shows 140K taxable income, not 70, enough to qualify, but still protected cash flow. That's intentional, not accidental. We as self-employed people probably don't budget very well. But at the end of the day, we can and choose where we plug in different expenses. I also think looking at the entity structure, I don't want to spend like a lot of time on this tonight. It's something you need to do, probably like a private call about. But a lot of people don't understand the tax benefits, I guess, Ebe, I should say, versus doing an S-Corp versus a single LLC,
I
all
can
those
chime in
different
really
things.
quickly for you if
Yeah,
you'd
go ahead. I
like,
was
just
just
to
going to say,
kind
can you
of.
comment on that?
Yeah, so one of the biggest things I come across with realtors and just anyone self-employed in general is they do themselves a disservice being on the Schedule C. And those of you who don't know what a Schedule C is, it's just on your 1040 form, and it's qualified as a small business, and you put all your income and expenses into the Schedule C. I have a rule of thumb is if you're netting $40,000, there's no need for you to be on a Schedule C. You're doing yourself a disservice, paying more to the IRS. Let's convert you over to an S corporation. Let's get you structured correctly. You're also lowering your chances of being audited, by the way, when you do an S election. A lot of people don't know this. Sure, so you have to kind of make sure is the juice worth the squeeze. If you're netting 40, I think to me, some other CPAs or accountants would say 35, 50, 40. I think is a sweet spot, depending on your marital status, if you're single, married, have multiple kids or whatnot. But a lot of the time, I notice a lot of self-employed individuals don't know about the benefit of converting to an S corporation. You're talking about a 15.3% um, tax saving on Social Security income tax, right? So there's a lot to go into, right? I don't want to get too deep into the S election, but it's definitely something worth considering, especially for real estate professionals that are earning as self-employed individuals.
I love that. I hope that was good for some of you to hear. I also think there is value with sellers. So we're going to talk a little later on capital gains, but the strategy before listing a property and also looking at what it can do for your business. So, again, being a valuable resource for your sellers. You also have situations where people are selling because they owned a property together with a business partner. The business is separating. You have people that go through divorce and they have two people involved in the asset. So I feel like a tax strategist can be a huge value when it comes to sellers, and you connecting them to someone like him that is involved with strictly real estate, I think just makes you win as a real estate agent. How to build kind of this partnership. Here's a bunch of things that I listed in here that I would do to generate leads, look great, create content, and also make Ebby be a public speaker, which he loves. But teaching at events, co hosting webinars, doing interviews. I know some of you are doing some podcasts. Also, getting them to do a tax planning checklist that you could put in your showing folders, getting them to be a part of all of your seller guides, and obviously put them in a position to be the tax strategist for your serious clients. You don't just look like a salesperson. Again, like we've talked about with the Magic Johnson theory, you need to over deliver and know your customer base in 2026. So I think that it's awesome. I think it's great. Alrighty. We kind of talked about the things that we're going to break down already. And again, proactive tax planning, I will fully admit, which I know is horrible, that I don't necessarily set aside a certain amount for taxes. I normally can gauge what I'm going to have to pay. I'm just trying to like get better at that. But I do think as an agent, people think they can't afford a tax specialist, and that really ends up costing them more money. So be proactive with yourself and practice what you're going to preach. If you don't understand taxes, you're working for the IRS. Ebby, what does that mean?
I mean, that's as clear as it can be there, right? So, and to me, it comes down to planning, right? So if you're not sitting down, everybody makes this mistake. I want to say 90+% of the people, I tell them every year, hey, why don't we do a tax planning session before the year ends so we can see what we can maximize prior to the year of the fiscal year ending, calendar year ending. So when it comes tax time, we planned for something. We can take some deductions. We can take advantage of certain things. When you're not sitting down and really looking at the numbers of the possibility of what could be or what's to come, it's 100% right where you're selling. You're working for the IRS, you're overpaying on taxes, and it's all due to the fact that you're not sitting with someone that knows what the heck they're talking about, and someone who's trying to work for your best interest. Like you said, a lot of people have this illusion that, oh man, I don't want to pay this guy to sit down and have this conversation with him that's going to save me $15,000. I mean, if you're okay overpaying 15 grand, that's fine. But that's money you could put back in your pocket and put it to work for you. So
I also think it's strictly education. A lot of agents will be like, oh, this is a tax call. It's not for me. The call that we did last week was straight planning your business, getting everything set up, getting you business funding to be able to spend more on marketing and all these things. They're like, oh, that's not for me. So I can tell you one of the reasons why clients call me and I don't pay for leads is because I understand all of this. Being a real estate agent is your business. You're an entrepreneur and you should be educated and know something about taxes and mortgage and title and all the things that comes along with it. I actually break this down for you, and I'm going to have Ebby talk about this a little bit. But for 2025, 2026, here's an actual breakdown of every single thing that you can write off. And one of the things that I want, well, Ebby, do you want to say anything before I scroll down about, biggest mistakes? We kind of put something at the end of this that you were going to talk about, but should we just go to the breakout session or?
one thing I do notice when it comes to some of and this is great, by the way. I highly encourage you guys to look at this and digest it and understand what it represents for you guys. But the mileage deduction is a huge, huge one. And a lot of folks don't really account for their mileage, right? They're not tracking it properly. There are so many apps out there. You got Mile IQ, you got Expensify. Heck, I think QuickBooks has some sort of integration as well, all of this stuff too.
I'm
And
actually going to do this
I'm a big
now.
fan of the standard mileage deduction. But there's what I do, just so you know, is I compare apples to apples and say, okay, is the mileage deduction going to outweigh where's the chart? Because I want to just kind of look at it.
I know I am. I'm trying to make it better though. Hold on.
Oh, okay,
I'm trying to, because
okay,
I can't see you for some odd reason. Hold on.
sure.
Hold on. Hold on. Okay, now it's right. I couldn't see you this whole time. So I was looking at some weirdness.
I
Okay,
got
I'm
you.
back to
Yeah, no
business.
worries.
Back to business now. I was trying to get a good pause for you. I'm sorry. I just threw you off. I'm so sorry.
So, in regards to the option A, option B, actual expenses, this is just specifically travel and vehicle, right? So, most of the time, the option A, the standard mileage deduction, is going to trump the actual expense most of the time. Right now, if there is a reason, as let's say, for example, I notice you have depreciation or lease there, you can either do this or this. You just can't do both, right? Because that's when the red flags come in and say, oh, you're trying to do this plus this. The IRS is going to say it's either going to be this one or this one, and they're usually going to go with the one that benefits them the most, not you, just so you know. So me, what I do is I just analyze what is the best case scenario for my client in this particular situation. What are we trying to accomplish? Are we trying to qualify for a property, or is the income threshold where it's supposed to be to in favor, for the lender and underwriting? I look at it just like that. I literally work in to make sure that underwriting says approved. Let's go close this loan. I
Well,
literally
Daniel
do this
Perez, you
all the
just
time.
went and bought a car and had quite the experience. But it's funny when I was doing this, I thought about you because I thought about, did Danny even take a look at tracking mileage, buying the car, trading in a car versus leasing a car? And so, since that's the first thing that you just brought up, which is like the depreciation in our car versus the lease, I guarantee you there's tons of us out there that haven't even taken a look at that. Now, I do
Yeah,
know.
I actually save a lot of people's butts, more than I want to sometimes when it comes to that, because they don't understand what they can and can't write off, right? On how they're supposed to go about their write-offs. Again, the depreciation add back is such a beautiful thing that it's often missed. Also with the mileage deduction, underwriters, lenders are all going to look at that kind of stuff because mileage is also a portion of mileage is an add back as well. So if let's say you're using multiple vehicles, one for XYZ reasons related to real estate or whatever your trade is, and then you have another one and you're fully depreciating it. Like there's ways to get around this to accomplish the common goal and maximize your tax return. It's just about
Well, I
understanding
want the
what can
most
I
deductions,
do.
Ebby, as you work on those 2025 taxes for me. Let's talk about
Absolutely.
home office use. How many people do not rent an office? You work from home. Put a seven in the chat. Seven in the chat for home office. I feel like this is a whole thing for people that work from home, Ebby, on writing this off on their taxes. Can you talk about this a little bit?
Absolutely. Yeah, so home office is a little tricky though, by the way. It's actually one of the most audited deductions because people do it wrong. Oh, I work in my house. My house is 1,500 square feet. I'm gonna do the whole 1,500 square feet of the house. No, that is a recipe for an audit all day, every day. Because you're saying my
And are you
mortgage is
guys paying
fully
attention
deducted.
to these things? Like, you do not want to get audited by the IRS. So every
Yeah,
time he mentions, hey, S-Corp, less chance of audit, hey, listen to what I'm about to tell you about this, I'm just throwing that out there that I would write that down. All right, sorry, Evie.
absolutely. No, no, you're fine. You're fine. So, and again, this explains it very well. It's got to be regular and exclusive use. It's got to be your primary, your principal place of business, and that's what it is for you guys. You guys are all practically working from home. You're writing your contracts up. You're communicating with clients. You're sitting on a desk, just like I'm doing here in my home office. Right? You have the two methods there where you see it. The simplified method is I don't want to deal with this. This is what it is. This is the maximum square footage of my office. This is the total square footage of my home. you're going to get the max $1,500, right? And then if you want to get more granular with it, you say, I want to go actual expense method, which I recommend because it gives you the most deductions. Then that's when you can start chopping down that
Now
tree.
I
And
got a
then
question for you.
go
Are
ahead.
you ready for this? So
No,
I
I'll
have
try to
a
be.
real home office downstairs, and then I have a real podcast studio upstairs. Can I pop quiz? Because I'm sure maybe other people have different situations as well. Can you write off both spaces? And do you have to write them off for the same business? Like, what if I wanted to write off the podcast studio for Real to Rise Academy and I wanted to write off the downstairs office space as Sunshine State Investments?
Well, that's exactly how I would do it. I would, if one if the space is for a creative reason, but it's related to your real estate Rise Academy, utilize that space just for that. It's an exclusive space, right? It's exclusively
So instead of
for the
doing it
purpose
on
of,
one, I could count like
right,
both of them.
right. You go here with one, you go here with the other,
Now, what
you
if
know.
people are renting like co working space? Is anyone on this call renting co working space? Or do you pay for trainings and event space? What does that look like on a tax return,
All
Abby?
deductible. All 100% deductible because it's related to your trade. Right? If you're renting a space for the purpose of engaging in the business that you're in, that's a complete 100% deduction to you. A lot of people don't realize your lock boxes, photos, websites, CRMs, social media ads. These are all deductions. A lot of realtors, a lot of self-employed individuals don't maximize these things because they don't know. If your clothes is branded, right? If you get your clothes branded, it's 100% deductible, right? So you're saying
We broke
even if
this
it's a,
down for them. We gave them a
what was that?
chart. We gave them a chart. So I'm going to scroll through this to get to this chart since Ebby's talking about it. Here you have marketing, tech, and lead gen 100%, technology software 100%, phone and internet, office expenses, education, coaching, meals, travel. Before I get down to this part, this was one of my $1 million gems that I was going to give you guys tonight. If I'm traveling, I try to write off certain things that associate with my travel, which I don't know how 100% legit that is, Evie, but I know that like meals, you only can do 50%. So I made this little chart and I showed it to Evie earlier to clarify that I was correct. And here it is right here. This has like your percentage summaries here. So just like he was talking about with branding, we actually as real estate agents can only write off $25 for client gifts. But if anything that you're giving a client has advertising in it, you can write it off 100%. So here you have, tech is 100%, coaching and education is 100%. So just because you spend $150 at dinner doesn't mean that you can write off $150, correct, Debbie?
That is 100% correct. That the 100% meals unlocks for a different industry, right? So 50%, that's just a standard. Now in regard, you mentioned something. I'm trying to remember it because it's important.
Travel,
Oh,
the travel
the
thing.
travel. So a lot of folks don't know. I mean, don't abuse this, but there's this thing called a wraparound weekend, right? Where, like you were mentioning, if you're traveling somewhere and you can justify, hey, I'm going to be working out of here, right? I'm going to go look at some real estate markets. I'm going to do some analysis. In theory, if you do it correctly and you document correctly, you can actually write off the entire travel. It's not just, hey, I'm going to travel for this and then go have fun over here. But if you're intentional about working, it's called a wraparound weekend. You can take a significant deduction there. Now I'm not telling you to go to Africa. You don't even go look at real estate in Africa, right?
How
That's
many of you
that's
guys knew that Uber and Lyft is 100% a write off? 100%. How many of you guys knew that?
100%. Yeah.
Let's see who's paying attention. And thank you for saying bless you to me as I was sneezing. So there's a lot of like interesting things in here. I also put some stuff about like virtual assistants, et cetera, et cetera, et cetera. Now let's skip to some fun stuff. Ebby is a real estate investor himself, and obviously he's a tax strategist. So, how many of you want to work with investors, are working with investors? Write that in the chat. Anyone that knows me knows that that is like my bread and butter because they're residual buyers. They're residual sellers. They just keep going and going and going and going and going and going and going. So I am very privy to capital gains, investor tax write-offs, all of those different things. The concept, and this is not like a political thing, but like Warren Buffett, Donald Trump, people that own McDonald's, because people that own McDonald's actually own the most real estate in the country. They don't pay a lot of tax, and people think it's fraud. And that's just not the case. They just understand tax deductions and they run money through their real estate. So I did a really cool breakdown here, and Ebby is very smart. He's like full of it, and he actually is a good speaker, and he was very prepared for tonight. He's just being super modest. But when we were going through this, I said, hey, I think this is some stuff that you could tell these guys about real estate investing, and not only for themselves but for their clients. So do you want to talk anything about these three categories, or do you want me to kind of scroll down and get to some of the write-offs? I mean, cost
Um,
basis may be kind of like a little advanced, but
yeah, I think cost basis would be a little more advanced. We can talk for a long time there. I mean, I can get into some of the stuff. You
I
tell
mean,
me what
let's
you'd like
just
to
start
know.
with some buy and hold stuff that people really don't think about. So if your client is buying real estate, they get to write off 100% of operating expenses. So like Ebby is not a licensed realtor. And if he owns a buy and hold rental, these are some things that people don't really know or understand. So you want to talk about that?
Absolutely. So actually, one of the things that a lot of people don't understand is that have you guys spoken about the real estate professional status? Have you guys ever gotten into that?
I'm very well versed. Does anyone on this call understand what it means to have real estate professional status? I got to know. Anybody else? Do I have any yeses? Would love to learn about it. Nope, 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 nope. I'm so glad you
I
brought this up because I almost made a slide for you on it. And then I was like, I don't know. Yeah, go ahead and knock them out. Tell them.
so I mean I'm going to keep it brief because again it can become word vomit. It can be overwhelming, but there are certain so when it comes to real estate holdings, right? There's passive activity only deducts passive activity, right? Like passive income, passive losses, right? Now, a lot of you guys might have a W 2 job, right? If you have a W 2 job and say, well, I'm also a real estate professional, how can I offset my W 2 income? Let's say you're a high net worth realtor. This is something that I actually work with a lot of high net worth individuals is they have this high W 2 and say, well, let's put together a strategy. How can we convert a passive activity to a materially participating activity where you are not only making this ton of money on a W 2, but you're also able to write above and beyond the threshold, right?
Let me
Because
give them
there's
a
this
real life
thing called,
example. Let me give them a real
yeah,
life
so,
example. Like a doctor making
mhm.
$500,000 a year is not a licensed real estate agent. So when he says real estate professional, it's a number of what is it, hours or money or time or what is it?
You have to pass two tests. And this is the hard part, right? You have to pass a 50, you have to spend more than 50%, right, working in your real estate investment.
Right.
And you have to spend 750 hours per year in real estate trade. So it is tough. Okay, you
Well,
have to
there's a lot
show
of
that.
people also, I can say this because I'm not a tax strategist. They claim that, and that's not the hours that they put in. So let's just pause. So if I'm a doctor, which would be one of
Right.
you guys' clients, and I do not have a real estate license, how a lot of people with high W 2 income, like they make over $500,000 a year, $1 million a year, they buy real estate assets. They become real estate professionals, which means they can write off a lot of things that have to do with these assets. And that's why a lot of my investors call me at the end of the year. Hey, like a guy, Joe, he calls at the end of the year every year, called 2 weeks ago before Christmas and said, hey, I got to spend $2 million right now. And they're doing that because they need the write offs because they have so much income. Does that make sense to everybody? Put a one in the chat. The extra credentials, one. Yes. Okay, good. Jocelyn, awesome. Cool. So as we're talking about buying these assets, it's basically like a business for them. So they're a W 2 employee, but they also have a business. So what they're going to do is it doesn't matter to them if this business shows zero profits on paper because they have W 2 income. So they want to leverage that and balance it out. Dude, I mean, I could do your job, bro.
Yeah, no, you're doing a great job right now. And I love it. Another thing, another way of going about it, when you have high net worth individuals and they say, hey, I want to buy a property. A lot of them won't qualify just because they buy a property. Buying a property doesn't get you the
Correct.
real estate professional status, right? So they're going to fall into a pitfall, right, which is called passive activity loss limitations, where you're only allowed to claim a small amount of losses. And then the other losses that remain, let's say you had $100,000 in losses, right? But you're only allowed to claim 25,000. They carry forward into future years till you can actually kind of unseat it. Open it.
27.5.
What are you talking about? 27.5 what?
We're gonna get to like some of the like depreciation stuff.
Oh, yeah, yes. Yeah. Have
And
you guys ever spoke about the benefit of the short-term rental strategy for high net worth individuals? Because that's where you unlock 100% of this thing here. A lot of people don't realize when you buy an Airbnb, okay, that's considered as STR, short-term rental. Anything average 7 days or less, 30 days depending on certain things, but 7 days or less, it becomes you're materially participating in this activity as long as you can prove it, right? As long as you don't have a Airbnb property manager, right? Then you can unlock uh, huge losses to offset that W-2 income. But again, that's a conversation for another time, I would say, because it does get a little tricky. It can be very complex. You also have what's called a cost segregation analysis. I don't know if you guys ever heard of
I
that
have that
term.
in here too.
Oh, okay. I'll
Cost
let you get to
segregations in
it.
here.
Go ahead.
So just on your buy and holds, I made you guys a sheet of the deductions. So like operating expenses, mortgage interest, property taxes. This is why I never buy anything with cash. I would never buy real estate with cash ever. I would never pay off my house mortgage. Not not leveraging debt appropriately, because I can write off all of this. And this is a really, really, really interesting stat here for you. 60 to 80% of early loan payments are interest. So if you are paying more money, and let's say you want to sell it and you need higher write offs, that's the only reason I would pay more towards my mortgage. Property taxes, 100%. Like, this is why people get mad at wealthy people that don't pay tax. They buy real estate and they write off 100% of their property taxes. Depreciation, this is what I was talking about. The residential rental at 27.5 years, and then commercial property at 39 years. I would Google this and go in depth in Chat GPT. It'll break it down for you. In our apartment models, when we bought them, we would do cost segregation studies to show the depreciation over owning the property. There is another software that will do like a 5-year analysis for you. We're doing an investor call next week, and I'll break that down for you. But all of these things, anything that you're adding value, appliances, roof, HVAC, electrical, plumbing, those are write-offs. And you also have some depreciation in that. So here is the cost segregation. I'm going to let Ebe talk about this a little bit. For my people that really want to work with high net worth individuals buying multifamily, cost segregation studies are expensive. You know, we pay for them on our properties, but it's insane the amount of tax reduction that you save.
Absolutely. I think this is one of like when it comes to high net worth individuals, it's one of the most commonly overlooked. I actually had a client last year who he paid a whole bunch of federal income tax. He's like, man, I really want this money back. I don't know how to do it. And and he's like, I bought this property and I bought this other one, and I'm not getting this money back. I know. I said, well, have you thought of doing a cost segregation analysis? And I broke it down, and what it is really a cost seg analysis, just for you guys, is they're going to send an engineer, right? So a qualified individual, and they're going to go around the house and they're going to pick apart specific sections of the house that they can accelerate the depreciation. So instead of 27.5 or 39 for commercial, they're going to try to accelerate components within that specific asset class to 1 to 5 years. So that makes it a lot much more attractive because you're saying, man, I was only able to depreciate 10,000. Well, now you're able to depreciate 40, 50, 60, $100,000. That cost segregation analysis, by the way, it can be costly depending on the company, but I've seen as little as 500 to $5,000. But if you're getting $100,000 deduction of the investment on an accelerated depreciation method, it's definitely worth the investment, right? And I have a couple of companies that I've worked with in the past. But to go back to that client, I was able to really save him a chunk of money on tax and recover some of that which he paid forward.
This gets pretty crazy that Ebe is 100% a tax strategist, and I can write him off 100%. Any of your people that are investing in real estate and get to that real estate professional status, they can write him off 100%. So all of that stuff that he's talking about, cost segregation studies, tax strategists, all of that stuff is write-offs. So to not spend the money to have someone analyze your portfolio is absolutely insane. You can look at 20% of your net rental income as far as, material participation versus qualified rental business. There are some passive loss rules you guys can read about. Fix and flip write-offs are totally different. How many people are working with people who want to fix and flip real estate? How many people fix and flip themselves? Ebe loves fixing and flipping.
Well, I laugh at this because a lot
I've
of
changed his
people,
whole life.
yeah, yeah, I laugh at it because a lot of clients are saying, "Oh, I just bought this property and I put $50,000 into it." I said, "Well, what do you? Oh, I want to deduct it." You cannot deduct it. It goes into what's called your cost basis. In other words, what you paid and what value you added to it, or and you can only take that expense when you sell the asset, right? Or when you're doing some sort of depreciation analysis, but it usually comes at the selling
Here
side.
you go, friend. They are added to the cost basis and reduce taxable profit at sale.
Yep.
Does everyone understand that? Put a 1 in the chat if you understand that. If you buy a property for $200,000 and you are going to sell it at an ARV of 425 and you put $50,000-$60,000 into the property, you don't get to say, let me do actual math here. So let's say 425 is what we're going to sell it at. We paid 200,000 for it. Now we have technically a profit of 225. We're going to have closing costs. We're going to have real estate commission. We're going to have all those things, but let's just do raw numbers. You don't get to say, well, Ebe, I spent $60,000. So subtract 60,000 from the 225 and I really only profited 165. You don't get to do that. And if you have shitty bookkeeping and you don't keep track of all this, then it's even worse because then if you get audited, they're going to uncover everything you've ever done. So at the end of the day, all of these expenses, we have labeled this out for you. And do you want to talk about kind of these things because that kind of goes into 1031 exchange a little bit? Or do you want to touch on the deductible items at all? A lot of this stuff is really, really, really self-explainable that you guys can definitely read. I definitely want to point something out when it comes to capital gains before we get into the capital gains slide. If you don't have a good 1031 exchange person, you should, because if you start working with investors, they can become at least a consistent 1 to 2 deals a month for you, whether they are fixing and flipping and you're listing a property for them, or they are taking that money, rolling it into buy multifamilies, et cetera, et cetera. Sometimes it's just better for them to do a 1031 exchange, and that you need to understand if you're giving them advice and you don't have a connection with like an expert of when that actually applies based on the length of time they've held onto the property. So I made you a quick little percentage summary for investors here for buy and holds. and for fix and flips. So see, the rehab and materials are at sale, interest and insurance, marketing and overhead, all that stuff. And then these are some of all the things that Ebe already mentioned. You don't have an exit strategy when you bought the property. You haven't talked to your tax strategist on how you're going to take those reductions and qualify your cost basis at closing. You have neglected all of these other different things. You've misqualified parts of your rehab. And think about it, if you have a pamphlet like this for an investor, how educated you look. The last piece of this is understanding capital gains. Write in the chat a 1 through a 10 if you have no knowledge about capital gains and real estate buying and selling, versus a 10, you're an expert at it. 1 through 10. Ebe, if you have to explain capital gains tax in 30 seconds for a very small child, how would you explain it?
Well, capital gains tax is very tricky here, especially for those who are flipping. A lot of investors make the mistake, oh, I get to flip this, I get to sell it for a profit, but they don't take into consideration the capital gains. So you have two rates. You have short-term and long-term. Short-term is anything held for less than a year. Long-term, anything held anything held for a year or more. And you really get crushed with the short term, right? You're talking up to 37% ordinary income tax rate that you can end up paying on that capital gains, depending on your tax bracket, which most people fall in about the 15% tax bracket, just so you guys know. So
Lucky
you
for
gotta be,
them.
yeah, I know, right? But there's a lot of folks don't take into consideration capital gains and the effect that they can have. However, again, everything has a solution if you plan for it, right? If you know for a fact you're going to pay an arm and a leg capital gains tax, there's a solution. There's a 1031 exchange, right? That's one of the solutions that a lot of folks don't
Which
know
is
about.
great for real estate agents. Why?
Absolutely.
Because they continue to roll the profits into buying another asset. And that's hence why you should know and understand all of these different things. And you can also send someone to a real estate tax strategist like Ebe, where I can say, hey, I've worked with this client, Sean. Here's the reality of the situation. This asset isn't really cash flowing anymore for them. They have a ton of equity in it. They could buy something bigger, buy more doors. It's going to cash flow better and avoid capital gains tax just by doing a 1031 exchange. Let me connect him with you. You can have a conversation. But this was cool. I think to include this, when we looked at this earlier, Ebe, was people constantly think that the capital gains is just with investors, and it's not. It's also with regular primary residents and sellers of primary homes. Can you just touch on this part for a
Yeah,
second?
so this is something a lot of folks are afraid of all the time. Say, hey, we just sold our primary residence. We know we're gonna end up paying all this money in capital gains tax. And to me, it's very simple. Have you lived in the house of the last 5 years? Have you lived in it 2 years? That's the first question I ask the person that owned the asset, right? Because then it qualifies as their primary residence, and then there's what's called an exclusion. Right? There's a capital gains tax exclusion that you guys can take advantage of. A lot of people do this, by the way. A lot of people buy a home, stay in it for 2 consecutive years, sell the home, and they continue doing this. And that's an actual wealth building strategy that
It's
a lot of
actually
folks,
amazing if you want to know the
yes,
truth.
it's an absolutely amazing strategy, right? Because if you're single, what is, I believe, $250,000 if you're single, excludable income on the asset that you just sold and you lived in there for 2 years. That's free money, right? And then
And
if
that
you're
is a
obviously
sentence
married,
that you guys can use with someone who's paying rent. If someone is paying $20,000, $30,000 a year for rent, I mean, do simple math. Not really sure where you're finding a rental for under 2,500, but 2,500 times 12 is $30,000. They're going to pay for rent. So when they say, oh my God, the mortgage rates are high. Oh, now's not a good time to buy. Great, dude. Don't even buy the house of your freaking dreams. Buy a house, let it appreciate. Don't overpay for it. Don't go work with a shitty real estate agent. Buy someone that's going to negotiate, get you in a property with the least amount of money down, get some let it appreciate, generate some equity, and sell the house in 2 years. It's a genius strategy. Like, you're not gonna lose. You're gonna make some money, and it's like a free savings account, Ebby, isn't it?
100%. It's a very underutilized wealth building strategy. I think a lot more people should take advantage of it. And I'm glad that we're able to educate some folk here on how to really apply that. But it's definitely, I love it. It's one of my favorite, and it's so simple.
I gave you guys some rental properties and investment real estate, like the different rules that apply with capital gains on rentals, depreciation recapture, no primary residence exclusion. Obviously, rental properties don't qualify for that. And most of the investors missing both of these different things. When you sell a rental, the IRS recaptures depreciation you took or should have taken. This is taxed up to 25%, which is separate from capital gains. And even if you didn't claim the depreciation, the IRS still assumes that you did. So again, if you're extremely uneducated, you're investing in real estate or you're buying and selling assets and you never claim the depreciation on your taxes, you're still going to get hit for it anyways. And if you
Yep.
don't claim the depreciation on your taxes and the IRS sees that, you're probably going to get hit with it and you're going to get an audit and they're going to find a bunch of other shit that maybe you didn't do intentionally, but that you did. True or false, Evie?
100%. I actually run into that all the time where I'm looking at tax returns. They have rental income, and I'm saying, "Where's the depreciation?" And oh, my accountant told me I didn't have to. Are you kidding me?
Yeah, you do.
First of all, you're leaving money and you're giving money away, right? And then the IRS automatically assumes that you're depreciating it anyway, and you're already exposing yourself to an audit. So it's yeah. Make sure you
1031
know who you're.
exchange is really a whole separate subject. And then I gave you fix and flip properties versus kind of ordinary income. What is not eligible for 1031 exchange? What is not eligible for capital gains tax? And then this is really insane too. I've seen this a lot where a client buys a primary, they want to also buy a rental, they end up selling the primary, and now they want to move into the rental. So the rental goes from a rental to a primary residence. And I gave you guys some notes here. It is a strategy. It doesn't completely become tax free, but it's a really, really, really good strategy. And then some net investment income tax here, what this applies to. I gave you some like quick little table summaries. I went in Gamma and I said, please format this differently. Please make this easier. And then some common like expensive mistakes that people make. Also, how really smart investors reduce capital gains tax. If you take some time to learn any of these things, you will look like a freaking genius. So I just want to open it up for questions. And I want to make sure everyone's very clear that there is no dumb questions. Everyone is yes, Sandra, I will send you all of those notes. I made them user friendly. I want to make sure that everyone knows there's no dumb questions, and also I want anyone to be able to ask any questions. It can be about your personal return. Abby, did you also drop your phone number in the chat?
I did, and I'm actually, while you're talking, I'm going to go ahead and share my booking link. If you guys have any questions
Perfect.
that you want to discuss outside of the chat, I'll go ahead and put on a booking link. So
And I
give me
mean,
a
what do you guys
second.
think? I thought Abby did pretty good for a professional public speaker. Paid professional. And you know, he's so funny. His personality is like this all the time. He's hilarious. Like, you can't ever tell sometimes if he's like super like not happy, but like that's his monotone voice all the time. And he's just the most genuine guy. You guys should definitely check out their space too. It's pretty awesome over there. Their little studio and all those things. And they're local. I love to support local business. So for me, this was kind of just an awesome relationship that I kind of felt I just need an appointment for my taxes. Awesome. There is a link in the chat right there. I also will say this very transparently in front of Evie. I have lots of real estate that I own in Illinois. I've had a lot of people do my taxes. And when I got with Ebe, I mean, I make money, so I'm very frugal with my money. I said, how much are you going to charge to do personal returns? How much are you going to charge to do business returns? He is extremely affordable. He honestly probably should charge more.
She did tell
And
me that.
whether you are making $40,000 a year, $50,000 a year, whether you want to work with investors, book an appointment with him, do a consult, and see how he can help you in your business. And then please collaborate with him. I would send multitude of clients to him. I would make an investor packet. We'll show you how to do that next week. But whether you're big, you're small, also all the information that you talk to your tax strategist about is confidential. It's kind of like us women that, go to the gyno, or guys that go to the prostate doctor. Like Ebe has to lip sealed HIPAA policy as far as like your financial information. He
Absolutely.
can't discuss that with me or anyone else. So whether you book a consultation and it's something you want to do and clean up your bookkeeping, I want to give you guys another tool. And tax people love me for this. And can someone remind me to talk about this at 4 Weeks to Success? Realitizam is a very cheap bookkeeping software for real estate agents. This is just me personally, but like I am not. Good job, Danny. I'm so proud of you. You're just doing life-changing freaking things this year. Danny is changing his whole life. I'm taking him to church on Sunday too. So Realitizam, if you guys look it up, it's super cheap. It's like $7 a month or $8 a month. I know, Josie, right? If Danny comes to church with me on Sunday, I think Pastor Tom is going to fall out. But Realitizam is awesome because it's made for real estate agents. You can change the categories to it, and it links to your bank statements. So I do not pay a bookkeeper, and my tax people love me. I have Realitizam. I link my credit cards. I link my stuff. It even allows you to put your listings in there and list out all of your expenses per listing. And then it categorizes everything. So let me just give you a tip and a trick. You cannot walk into Ebe's office with a freaking box of receipts and be like, here you go, do my tax return for 500, 600 bucks. That is not the move. But let me tell you a trick. Are y'all ready for the trick? If you're not paying attention, I'm not going to tell you. You got to put a 1 in the chat. Realitizam will backdate the imports. So if Danny logs in today, how cool is this, Ebe? And he links his Chase account, it will say, how far back do you want to go with categorizing your transactions? And it'll categorize all of his shit. Dude, I'm charging for Thrive Thursdays. Like, I'm sick of this, Danny.
What is it called?
Oh, what is it called? What did they call it? I'm charging, Josie. No, I'm not, because I'm taking Danny to church. Here, I'm going to share my screen for you right now, since y'all are paying attention. And how did you guys like the call tonight? I know taxes are not great, but like it's.
We like
I
the
don't
call.
know another way to really make it fun.
We love the call. We
on
hate the taxes.
Gamma, go back. Da, 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 da. Let me go in here. Realitizam.
And make sure you share that deck with them too. I think that there's a lot of value on that deck.
Here you go, cuz. Realitizam. The best. I swear to you, I've used this since I've been in real estate. And the thing about it is like not a lot of people know about it. So their customer service is really great. Let me see what your pricing is. I pay the yearly. Oh, it's $11 a month. You get a free 30-day trial. And I think if you pay for the year, it's like $110. So I just pay for the year. But see how it breaks everything out? So any tax guy that I have, I give my login to this software. And it will also export it. So then they can go in there and see all that. And then you can add up your stuff. So it shows you what you've spent in advertising. So if you take my sheet, you want your advertising to be 72% because it's 100% write-off. And so it categorizes it, and then it keeps everything per year, and then it syncs all of your accounts. Credit cards, bank accounts, everything, and it'll backdate it. If this was helpful, put a yes in the chat.
I'm going to be
10 new
recommending
people.
this to some of my real estate clients too, believe me. So
I'm
I
going to get an
appreciate it.
affiliate link. As much plug as I plug,
There you go.
I
You
want an
should.
affiliate link for Ebe and for Realty Zam. Dude, but how cheap is that for software?
You know
And
what? It does
QuickBooks
two
is too
things.
much for me, bro. QuickBooks is like, I'm
Oh,
like,
yeah.
dude, spreadsheets and it's hundreds of dollars. I've been using Realty Zam for freaking 10 years and it does just damn fine for me. And then it's so cool because what it does is, let me just tell you the coolest part. I'm a numbers girl. I like to make money, so I enjoy taxes. When it syncs all of your stuff, it'll send you an email and it'll say, here's all the transactions, deposits and expenses that come out of all your different accounts. And it'll say, Danny, before we put this in categories, go through and check them off. So if you're smart, on the 30th of the month, you go block an hour of your time. Realty Zam, yes, ma'am. And at the 30th of the month, I log into Realty Zam and it pulls up all the expenses and it will start to memorize what you've told it. So Uber and Uber Eats were confusing because I'm a single female. So like I DoorDash and Uber Eats daily. And so when you tell it, I want Uber to always go to travel and I want Uber Eats to always go to meals, then you have to stop doing that. So you start categorizing only like 6, 7 expenses. But now as a business owner, it's time for everyone to grow up and be a business owner. You know how much money you're actually spending versus what you're writing off that you would spend anyways. And you can kind of see where your money is going in your business and how much money you actually make when you have photos and signs and marketing costs and all of those things. Does this make sense? Danny, we're going to get you right, cuz. Anybody else have anything? D, you're on mute. I love all of you guys. I love spending Thursday nights with you. What up, D? No, there you go.
If you have to do taxes more than 1 year, just book the appointment with Ebe.
Ebe, he can just make one appointment if he needs to talk to you about multiple years of taxes.
Absolutely. And I also provide a free look back on tax returns. If you guys are unsure of your tax returns, I can look back and see, okay, this is right, this is wrong, and whatnot. I've done, believe it or not, I've had many people 5+ years of taxes, non-compliance. And so that's not a problem.
He's lying. He actually charges you per minute. The consultation is $150 per 30-minute sessions. It's like putting money in a machine at the fair. And then it just stops. He just stops talking in the middle of the consultation. No, free consultations, obviously, sitting down with him, doing that. And I hope that you guys build. Is that something you can look back? Absolutely. Jocelyn, that's what I'm trying to tell you. I had somebody do my taxes wrong and I went and had them refile and get me money back because they were claiming it twice. So yes, you can absolutely take a look at your returns.
I'll give you a little tip here. If for whatever reason I realize that your tax liability is looking really high, I can retroactively convert you to an S corporation within a specific time frame, and you'll save yourself some money there. Just that alone is worth this whole meeting, to be honest with you.
I also think it's worth it to know that you can simply log into a software for 30 days for free, get all of your accounts linked, have them categorized, and then walk into his office with your freaking computer and say, hey, how does this look? It literally takes you like 30 minutes. Magda, Ebe reaching out. Magda, do you want the link for the consultation? Do you need a phone number? Does anyone else need the link to the consultation? Ebe, can you drop that again?
Yeah, I'll put it right here. I'm doing it.
And then how do you guys feel about utilizing this knowledge to work with investors and set your clients up to actually buy assets? What about single family sellers? Let me give you $1 million piece of advice for everyone who's still on here at 7:44. Remember in Gamma, we were going to do an expired packet with an address. Are y'all ready for this? Like, where's the drum roll? You could add a section in that expired packet that says, help you save on capital gains tax, blah, 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 blah. Invest your equity in your home better, whatever it is. So now it's like, I can sell your house that another agent couldn't sell. I can also consult you on what you could do with this potential equity. If someone has $75,000, $100,000 in equity, they don't need to go put that all in another primary residence. So we could get them a rental property, short term, we'll just say that because Ebe's on the call, and call them a real estate professional, get them a bunch of tax write-offs that offset this and that, and also put them in a place to get passive income for retirement. True or false, Ebe?
And I'll mention this. This is a fact. And there's also another strategy when it comes to the capital gains. Just so you know, there's a thing called installment sale, right? So they're saying if they actually are in a bind and they're owing hundreds of thousands of dollars in taxes for whatever reason, you can actually spread the capital gains tax if you plan for it correctly over a period of 5 years. So you're only claiming portions of that capital gains over a period of time. But we can get into that another time. That's a completely different subject. I just thought I'd put that out there since you were talking about capital gains.
How many of you guys feel better at least doing this call? I know it's really overwhelming. I will get you the slide deck, but just learning some about tax and then your own personal business setup, etc. Put a yes, put a 1. You could put, it was like horrible to like listen to and very overwhelming, but I needed to know. And connect with Ebe, make a consultation to even talk with him about doing business. Obviously, he has lots of clients that buy real estate. There's plenty of them to go around. He's always looking for good realtors. And I am going to have him come to some of our events, and I'm going to make him a professional keynote speaker so he can tell his amazing story. You should bring the girls, though.
I will. Maybe I'll do another one on asset protection and planning. Maybe we could do something like that in the future.
Let's do it. I love you guys. Thank you guys for coming tonight. We hope that this call will help you thrive. And as always, we will see you next Thursday. Crush your week. We're out.